Good morning, good morning, good morning. It is Friday, the 9th of May. Welcome to today's morning blast. We've made it through the week. Finally, the longest week since last week. Before myself, Mr. Michael Brown, jumpstart your trading day. Let's get the legals out of the way. So, as usual, nothing discussed on this space session. Trading or investment advice or infers any kind of endorsement by PIQ, myself, Ryan Paisley, or indeed the magnificent, mighty Michael Brown.
Indeed, yes. Very good morning, Ryan. Good morning, everyone, and a very happy Friday to you all.
Is it?
Well, it is here. You sound a little worse for wear.
Yeah, yeah, I'm a little hungover. In my defense, it was my dear friend Tonto from KBL Kite Broking Limited. After 30 years in the city, was he's leaving drinks, he's moving to another place. So yeah, it was a very good night, though I'm slightly sore head today.
Oh, well, I will carry the show as usual. I had a bad back
Please
anyway, but
do,
it's
please
getting
do.
worse by doing this every day.
Wow.
Although I was going to say to start the show off this morning by saying that young Zach can put down another Scythe because I'm working from home today, but he hasn't even bothered
Wow.
to turn up.
Oh, note that
So,
down. Note
well, he's
that
not
down.
here.
He is. I can see him.
Oh, is he? Oh, he is here now. Fuck, that's nice. Fuck. Right. Well, let's crack on anyway. In that case, good morning once again, everybody. It was a decent day in terms of risk appetite yesterday. The S&P 500 closing around 0.6% higher. The Nasdaq adding about 1%. Although we did close some way off the intraday highs, and we saw those gains fizzle out a little bit towards the back end of the day, primarily a result of some headlines crossing that President Trump was reportedly considering this increase in taxes on the wealthy once again. In terms of markets elsewhere, it was also a broadly positive tone with treasuries slumping across the curve and the dollar rallying quite considerably against most G10 peers after Trump's comments regarding trade, which I'll get to momentarily. As I said, Treasury selling off across the curve, the two-year yield rising by 13 basis points, north of 3.9% yesterday, although we have paired some of that move during the APAC session. And we also saw a bit of a sell-off at the long end as well. With the 10-year and the 30-year rising by 10 and 6 basis points, respectively. And as I said, the dollar trading broadly firmer against all peers, with the dollar index up by about 0.75%, trading all the way up to 100.85 during the overnight session. In terms of fundamental drivers yesterday, well, we may as well start with trade, as that seems to be where we start every single morning at this moment in time. Of course, all eyes here in the UK, at the very least, were on this trade deal or agreement in principle between the United Kingdom and the United States. Frankly, the details of this agreement are very, very thin on the ground indeed. And President Trump himself actually said that the final details of this deal will be written up, and I quote here, in the coming weeks. So we're not entirely sure what has been agreed. But I think the big takeaway is that whatever has been agreed, the UK will remain subject to the 10% baseline tariff that was announced on Liberation Day on the 2nd of April. There were also comments from both President Trump and Commerce Secretary Howard Lutnick saying that this deal is not a template for others. The 10% is probably the lower end of where tariffs will settle, and that tariffs on other countries could be higher even if deals are struck. Now, I think this is a very, very important point because you've got to consider two things here. The first is that the United Kingdom is, well, in Trump's own words, seen as a friend of the United States. And the second is that the United States actually runs a trade surplus with the UK. Now,
So
if
why
this
have we
is
got tariffs at all?
well, so if this is how the Trump administration is treating their friends, and I don't want to get political here, but how on earth does anyone think they're going to treat their perceived enemies? If I was sat there in Brussels or in Beijing, I would be bracing for pretty chunky tariffs to remain, even if you end up striking a trade deal. So I think, yes, great, a deal has been done, but a little bit of cold water on the optimism because it's not necessarily a boilerplate that everyone else can follow. And also, it's not a
And
deal that entirely removes tariffs.
and who was saying yesterday that about the boilerplate situation, and if it was, it would be bullish. If it wasn't, it'd be bearish.
Indeed, we were.
It was me saying about boilerplate. Oh, was there any news on Turnberry? Because I know that's all you were interested in.
No, there wasn't, sadly. I
Oh,
did a bit of
boo.
digging around for that this morning because I was quite keen to know what was going on with that.
Yeah,
But sadly,
it was
we may
very,
have to
very
wait.
obvious that that's all you cared about, let's be
It
honest.
really was. There were a few other bits and bobs from Trump yesterday while he was signing this or agreeing to this trade agreement, which was a very surreal situation because I think it was all done very last minute. Keir Starmer joined via speakerphone, like a sort of old school conference call back in the day, if anyone remembers those. Anyway, Trump was also talking about China, saying that China wants to make a deal very badly. Yeah, of course they do. He was also saying that he thinks they will have a good weekend with China and that the tariffs on China can't go any higher than the current 145%. There were also reports later on via the New York Post citing Trump administration officials that the United States is reportedly weighing plans to cut tariffs on China to between 50 and 54% as soon as next week, and that tariffs on neighboring Southeast Asia countries could also be cut to around, excuse me, to around 25%, depending on how those negotiations progress. So, certainly something
90%
worth
none.
keeping an eye on. Yeah, it did very much that vibe. Trump was also talking markets. He was saying, and I quote here, this is not investment advice from my desk, it's from the desk of the Oval Office, saying that you better go out and buy stocks now. I mean, to be fair to him, last time he said that, the market rallied
Well,
10%.
you know what?
So
I was
we'll see
about
if
to
he gets
say,
another hit rate on that one.
yeah, I was about to say that last time he said something like that, we all kind of laughed, and then literally 24 hours later, we're like, "Oh shit!"
Yeah, I mean, I'm loath to say this, but you almost can't ignore that based on
There
the
you have it,
precedent. And
folks. There you have it.
I know it's
Michael
n
Brown.
equals one in terms of a sample size, but
Michael Brown is saying buy with both hands. There you go. Quote.
no, I'm not. In terms of Trump was also talking about monetary policy yesterday. He was saying that everyone is cutting rates apart from Fed Chair Powell, and that came after he slagged him off again on Truth Social, saying, and I quote again, "Too late, Jerome Powell is a fool who doesn't have a clue. But other than that, I like him very much," which I'm sure Chair Powell will not care one jot about. In terms of monetary policy, of course, we did have a few central bank decisions yesterday. The Riksbank holding rates steady at 2.25% in line with expectations, but did sort of modestly tweak their guidance, noting that they see, and I quote, a slight easing of monetary policy going forwards. We also heard from the Norges Bank, who also kept rates steady, this time at 4.5%. Of course, they have not delivered any rate cuts yet this cycle, but their guidance reiterated that the rate will most likely be cut in the course of 2025. That rate cut is expected to come in the second half of the year. Of course, the main event, though, in terms of policy yesterday came from the Bank of England on Threadneedle Street. And to be completely honest, the MPC have got themselves into a right old pickle once again. Bank rate was lowered by 25 basis points to 4.25% in line with expectations, but that
But
is
the rest
pretty
was a
much
shambles.
exactly that. That is pretty much where the sensibleness of this decision ends. In terms of the vote split, we had five policymakers in favour of that 25 basis point cut. We had two of the nine-member Monetary Policy Committee preferring a larger 50 basis point cut, those being external policymakers Dingra and Taylor. And then, in what was a very surprising decision, we had two policymakers favouring holding bank rates steady at four and
Yeah,
a
I
half
didn't see that
percent.
coming.
And no, I don't think anyone saw that coming, to be completely honest with you. They were external member Catherine Mann and, weirdly, chief economist Hugh Pill. And I say weirdly because you tend to see the internal members of the MPC voting as a block, and clearly that
Yeah.
did not happen yesterday. What is even more perplexing than that is, of course, you've got to remember back in February, Catherine Mann was voting for a 50 basis point cut, and now she's so pivoting all the way to the dovish end of the spectrum, and now she's back at the hawkish end of the spectrum. If anyone could go and check her trading account, I would be much
Yeah, yeah. But
obliged.
this is the thing. So we were saying yesterday about, check when we get the data about who voted for like the number of voters for each kind of like parcel.
Mm.
And when I saw five for for a quarter cut, I was like, hang on a second, what the hell's going on here?
Yeah,
But
and actually, what was even more interesting, if you're nerdy enough to dig into the meeting minutes, as I was,
no,
it was actually described as for most of those five, it was a close call as to whether they went 25 basis points or unchanged. I mean, the BOE are just a complete and utter mess at this moment in time, as is standard operating procedure, really. We also got surprisingly hawkish policy guidance from the BOE yesterday. They reiterated that a gradual and careful approach to further policy easing remains appropriate, and also repeated that policy must remain restrictive for sufficiently long in order to bear down on the risks of persistent price pressures. That guidance being pretty much a carbon copy of what they've been issuing for the last 4 or 5 meetings, to be completely honest with you.
what you could say
And
10 years.
well, not far off. But again, surprisingly hawkish. We were expecting the bank to open the door to a more rapid pace of easing moving forwards. All of this is even more illogical in the context of the bank's latest economic forecasts. This round of forecasts, I'm not going to run through all the numbers, they're on the bank's website if you do want to go
Thanks for
through them.
that.
But the summary of the monetary policy report is that the bank have moved their growth expectations lower. They have moved their unemployment rate forecasts higher. They are now forecasting a lower inflation peak at 3.5% in the third quarter of this year. And they're also expecting CPI to get back to target about 9 months earlier than they had previously expected, now seeing 2% in the first quarter of 2027 compared to the fourth quarter of that year previously. So you have a set of forecasts that points to the need for a more rapid pace of easing, or at least an acknowledgement that a faster pace of easing is necessary, and a
That
Bank
seems
of
to be
England
slowing
that
down.
just exactly sort of buries their head in the sand and goes, no, we're going to ignore what our staff have put together. Governor Bailey offered frankly nothing by way of additional clarity on any of this at his post-meeting press conference. He just said that rates are not on autopilot, and that they expect the degree of slack within the economy to widen over the next couple of years. Again, if you expect that, why are you staying hawkish? At this point, it just seems frankly ridiculous what the Bank of England are doing. I would imagine that we are going to end up in a situation where they end up sort of chasing their tail on this one. We can all see that inflation is rolling over. We can all see that growth is struggling considerably. And as a result of that, I think the bank are going to find themselves quite far behind the curve once more.
Yeah, I
In
agree.
terms of other considerations from yesterday, just a few other bits and bobs from me. We did have the
Bits and bobs.
weekly.
Can I just, sorry, Michael, can I just say the use of bits and bobs is very much appreciated by our dear friend Angie, who I do the grain market blast with, who I can
Oh,
see
is it?
listening. She that's one of my new favorite English phrases, although she calls it bits and bobbins.
Oh dear. Crikey. Well, I aim to please. In terms of other things, yesterday, we did have the jobless claims figures out of the United States. Not much to worry about. Initial claims at 228,000, continuing claims at 1.879 million. Of course, neither of those prints pertains to the May non-farm payrolls survey week, so do bear that in mind. We had a 30-year bond auction in the United States that tailed by 0.7 basis points. A little bit soft, but given the sell-off that we saw across the curve yesterday, perhaps unsurprising.
Yeah.
A few other headlines. The European Union, they came out at long last with their list, excuse me, of goods that they want to throw, US goods, I should say, that they want to throw tariffs on if trade talks fail. This list includes about 95 billion euros worth of goods, includes various other bits and bobs, scrap metals, chemicals, aeroplanes, cars, bourbon whiskey, very much in line with earlier sources reporting. Although we did hear from,
Sorry, did you say bourbon whiskey?
it's bourbon, isn't it? I realised that as soon as I read that out.
Look,
It's been
I
a
don't
long
know. I
week,
don't know
Ryan.
the.
It's been a long week.
To be honest, I don't know the pronunciation of much, but drink I do.
I'm more of a Scotch man myself, anyway,
Oh,
to be honest.
stop it.
That was also very much in line with earlier sources reporting, so not especially surprising there. Overnight, we have had some trade data out of China. Exports rose by 8.1% on an annual basis in the month of April, well above the 2% consensus. I do think that there was probably a degree of sort of further tariff front running going on here, but it is also noteworthy that exports to the US fell by 21% on a year-on-year basis. So that sort of effective trade embargo already kicking in. Imports, incidentally, were basically flat on the year. And last but by no means least, white smoke from the Vatican yesterday. They have elected Cardinal Prevost as the new Pope. He will be known as Leo the 14th, and he is the first ever Pope from the United States. So I guess we can say that we're making popes great again now.
Oh God, I wondered where this is going. I was like, there must be something coming for you to bring this up.
your your religious correspondent in Blackheath handing back to
Yeah,
the
right.
studio now.
I was like, hang on, why the hell are we talking about this? I was like, there must be a pun or something coming. Um, well, thank you, Mr. Michael Brown. So as usual, I will now read out some choice headlines from the overnight news roundup, but please do bear with me because I did have a little bit too much to drink last night. I can see Mr. Peter Benton listening in, so he was there last night. Very good to see the wise and the magnificent Mr. Peter Benton, one of the nicest people, one of the nicest brokers in London. There you go. But anyway, cracking on with Zach's overnight news. Again, if you don't already subscribe to this, please do. It's the best way to keep track of all the overnight news headlines that you might have missed whilst you're in bed. Starting off with trade, Trump considers cutting tariffs below, China tariffs below 60% with potential implementation next week if trade talk progresses. US is prioritizing lifting China's rare earth export restrictions in upcoming trade negotiations. Again, I keep mentioning this. This seems to be something that's flown under the radar quite a bit because it was about a month ago now that China basically halted rare earth exports, but I think
Mm.
because there was so much, I think because there was a dearth of other headlines like flying around, it wasn't really picked up. But we saw it mentioned a few times in some earnings kind of commentary and stuff. I think it's really hitting more than the headlines belay. But anyway, Commerce Secretary Lutnick says the US will roll out dozens of trade deals, but 10% global tariffs likely to remain. Trade deals with South Korea, Japan may take longer than the UK US framework agreement, says Lutnick. China's vice foreign minister asserts confident in managing US
So, can
trade
I just?
policy. Go
I was just going to say on Lutnick,
on.
bit of
How
a
long you got?
well, yeah, there is that. Bit of a dig from him last night. Actually, he was speaking on CNBC or Fox or one of those networks, and he said, "Well, we are now going to focus on the big trade deals." I'm like, "Sorry, not the big trade." He was like, "We're going to focus on trade deals with the big countries." I'm like, "Oh, are UK not a big country anymore?
Wow. Right. Well, he's gone in me bad books. He
Was he
will
not in
be
them already?"
well. Yeah, good point. China's He Lifeng, close to President Xi, leads US trade talks in Switzerland this weekend. Again, we've mentioned this a couple of times for those not that maybe have been living under a rock. The US and China are talking in Switzerland. Funny enough, myself and Angie were talking about this yesterday, the grain blast. Basically, I think if we're being honest about this, I think the most positive outcome of this weekend's talks will be walking away with an agreed framework. It's got very much the vibe of a meeting about it. But don't forget that we could walk away. You know, we saw Zelensky and Vance and Trump in the Oval Office a few weeks back. This bear in mind that we could walk away from this weekend with China and the US even hating each other even more than they currently do. So one to bear in mind.
And also, of course, bear in mind that this is a meeting that the US have requested, and it's
Yes.
almost only happening because China just happened to be in Switzerland this
Yeah.
weekend.
No,
It's
absolutely.
not as if they're going out of their way to hold these
No,
talks.
exactly. And China did caveat the whole meeting 3 days ago, I believe it was, by saying, "Look, our position hasn't changed. We're only doing this because we were asked to show up."
Yeah,
And
exactly.
like there's some free Toblerone going around. I don't know. China signs a 900 million deal with Argentina on soybeans, corn, and vegetable oil, avoiding US sourcing. Obviously, I'm guessing Angie will be covering or mentioning this later on in the grain market blast at 2:15 London time. Germany's new Chancellor Merz and Trump agreed to resolve trade disputes quickly. just on this, I'm not sure if it's going to be in the headlines, but just in case it isn't, MERS yesterday came out and said that it's well, he declared in Germany a national emergency on migration. And just going to float this out there, it wasn't that long ago that when the UK government said similar, they were branded by EU nations and EU governments as very, very racist. So, how the tables have turned. Macro news: rising demand for non-dollar currency derivatives signals urgency to shift away from greenback amid trade tensions. That's according to Bloomberg. China's April exports beat forecasts driven by Asia and Europe, despite US a sharp US shipment drop. China's crude oil imports rose 7.7% year on year in April, supported by sanctioned shipments and stockpiling. China's April new yuan loans likely shrank significantly due to US trade war impact. That's according to a poll by Reuters. Japan's wage growth cooled in April and exports slowed, supporting cautious BOJ rate hike approach. UK fund managers warn that the London stock market sentiment is at rock bottom, urge pension fund reforms. Morgan Stanley revised. Go on.
Well, I was going to say, I'm not sure this is one. I'm not sure it's anything new, but two, I'm reluctant to say we are actually at rock bottom. I think things could probably get a hell of a lot worse for the London
Oh,
market, to be
yeah.
honest.
When I read out rock bottom, I was like, really?
Yeah.
Wait until next week. Um, Morgan Stanley revises Bank of England forecast, now expects rate cuts from August to reach 2.75% by mid 2026. India's central bank ready to use reserves to stabilize rupee amid Pakistan tensions. Mexico sees tourism boom from Canada, with travelers boycotting the US over Trump policies. And in geopolitics, Trump calls for a 30-day Russia-Ukraine ceasefire, threatens sanctions if truce is violated. North Korea's missile test simulated a nuclear attack on the US and South Korea. That's according to state media. China and Russia agreed to deepen cooperation on international law. That's after Xi and Putin met yesterday. UK to sanction up to
Have
100
you seen?
oil.
Oh, you won't have seen the pictures of that, will you?
No, I
They,
was in the pub.
well, yeah. Well, they weren't. They were sat round this comically small table, sharing tea out of the same little pot together. How cute that
So,
was!
so do you remember during COVID when Putin was at that really, really long
It was like
table when he
100 foot long. Yeah.
yeah. So do you think they're over like they're kind of going the other way this time? They're like, we need to
Yeah.
shorten the table.
I mean, G
Um,
will be sat on his knee before too long.
Equity news, just a few before I hand back to Michael. Nvidia to release downgraded H2O H20. Jesus, I did that again. H20 AI.
H2O.
Oh
That's
God.
water, you muppet.
Yeah. All right. I'll start again. Nvidia to release downgraded H20 AI chips for China in 2 months due to US export curbs. Coinbase reports sharp Q1 profit drop despite revenue growth, reflecting crypto market volatility. Lyft boosts stock buyback to 750 million, beats Q1 profit estimates on steady ride hailing demand. Pinterest forecast above estimates Q2 revenue driven by AI tools boosting ad spend. Uh, Paramount Global beats Q1 estimates boosted by Paramount Plus streaming performance. TSMC, obviously the chip name, posts record April revenue up 48.1% year on year, driven by AI demand. Taiwan's Quanta, Wistron, and I'm going to say Wiwin report best ever April revenue on AI server demand. And finally, for me, SMIC to invest 7 billion with a B in 2025 to expand capacity despite US and China tariff war. That's gone to Nikai. And now back to you in the studio.
Oh, I was expecting a little pun to end there, but
I
sadly
yeah, I
not.
was. I think I'm struggling. I'm not gonna lie.
Oh dear. Right. In terms of today, then, Ryan, you'll be very pleased to know that the economic docket is quite barren throughout the European session.
Let's
And
be
in
honest.
fact,
Let's be honest. It could be full. I wouldn't give a shit.
well, yeah, that's very true, actually. I was just being charitable. We do have quite an empty docket throughout the North American session later as well, actually, to be completely honest with you. The only notable release today comes out of Canada at 1:30 this afternoon, London time, with the April labour market report. Employment seen rising by 5,000 on the month compared to the 33,000 decline that we saw in March. Unemployment seen rising to 6.8 from a prior 6.7%, while earnings growth should cool to 3.3%. down for a prior 3.5%. Money markets currently discounting around a 50-50 chance of a 25 basis point cut at the next BOC meeting on the 4th of June, though frankly, tariff developments are going to have much more of a bearing on what the Bank of Canada do next than anything that the labour market report may say. In terms of other things to focus on, the corporate earnings slate is relatively barren, certainly no notable earnings before the open today, and obviously nothing after the market close. But we do have a busy docket of central bank speakers up ahead, sadly. The FOMC
Yeah.
blackout period has come to an end, and boy, are they making the most of it. We are going to hear from Barr, Barkin, Goolsby, Hugler, Waller, and Williams twice as we move through the day today. We are also due to hear from the ECB's Simcus, as well as Bank of England Governor Andrew Bailey and Chief Economist Hugh Pill. It will be interesting to see what Mr. Pill has to say given his dissent yesterday. And last but by no means least, of course, do be aware that there is the potential for some de-risking as we move into the weekend, and also a very, very high potential indeed for gapping risk at the reopen on Sunday night or Monday morning. Not only do we have all of the geopolitical shenanigans going on that Ryan was alluding to earlier, but also, of course, those US-China trade talks taking place in Switzerland, which are going to have a huge bearing on where the market opens on Sunday night. But for this morning and for the week, that is all from me for the time being.
Thank you very much, my dear friend, Mr. Michael Brown. Listeners, as always, thank you so much for tuning in. I know I say it on not just this show, but the Grain Blast, the Crypto Blast, all the blasts. Everyone loves a good blast. We really do appreciate you tuning in, especially our regular listeners. If you are trading today, keep it tight. If you're not, good luck to you. Have a great weekend. And myself and Mr. Michael Brown will see you on Monday. Take care. God bless.
We will indeed. Bye for now.